David, good morning. Happy Tuesday. I'm just going to start off with this. For folks, download David's free ebook to help you navigate market uncertainty. And I started with that because that's a perfect segue. We are seeing all kinds of market uncertainty right now. Tell us what it is that you see and what are you trying to do with all of this uncertainty?
In real simple fashion, I'm trying to swing the bat and get fairly aggressive when the opportunity arises, like last week, and do a lot less in between. I don't think this is for your average trader, more new type guy or girl who's looking to make money every day. This is not that market. This is a market to understand when fear gets insane, when the VIX is over 50, when you see stocks like NVIDIA go under 90 to get aggressive, and when we're back up here to be taking profits and do a bit less. And across the board, that's exactly what I've been doing. And then on the opposite side, like yesterday, I loved that gap open. I warned people over the weekend on my Twitter. I said, if you're buying, you don't know what you're doing. If you're excited to buy Monday. So first thing I did was actually get fairly aggressive on the short side yesterday on Apple. So I'm taking advantage of the extremes, and for me, I love it. I get it. Your average trader may get nervous, but these are the moments to take advantage of. And then when you're right smack in the middle of the range, do a lot less.
Okay, so I was going to say, just as kind of like an overall theme here, would you say that less is more in a situation like right now?
Yes, but I think people can get the wrong idea that way. So I think that they get too defensive. So less is more when the moves have already happened. When the NASDAQ is bounced 16%, you sure as hell better believe less is more. But no, don't freeze when you start to see your favorites go to levels that make sense, even if earnings are going to be 10% less than they thought they'd be just 2 weeks ago due to tariffs. So less is more in between, but at those extremes, like last weekend, I was busy all Saturday, all Sunday, getting ready for Monday. Today, a little less to do, and I'll do less. And it might be a boring day, frankly. So yes, less is more, but understand you have to step up to the plate when these extremes occur.
Okay, now I love that part too. That was a perfect setup here, because one of the things that we've been saying here on this show is that although some of this might feel crazy and feel fast moving, the reality is that not stepping away completely is the right. I don't want to use double negative. Staying present so that you can actually take advantage of some of these moves is going to be paramount. Running to the sidelines is not necessarily the best move. So that sets me up. Now that we've actually got a little bit of a bounce here, you were talking about Apple here. Apple's actually set to open up right beneath its 500-day moving average, which we just recaptured yesterday. We're talking about the SPY earlier here. This is actually still under its 20-day, and it's kind of right in the middle ground between the 10% and the 15% pullback from the all-time high. Where we're sitting today with some of the moves already passed, what's next for you? What do you have on your target list next?
Sure. Meta. So Meta, we were pretty aggressive between 480 and 500, and you had that monstrous bounce. You now have the trial going on. There was some underperformance yesterday. I'm not reinventing the wheel in this market. I'm not just buying FANG or Mag 7. There's a lot of names I buy, but I do want to buy cash flowing companies that can perform even with what our president's doing, right, regarding tariffs. So to me, Meta is kind of a no-brainer if we get back towards that low 500 area. And if we revisit lows and it's at 480, I'll definitely get aggressive there. And then, frankly, it's literally waiting for spots. So let me give you an example. I grew up in the business really focused on semis from guys like Whittington and Dan Niles before he went to manage money. And to me, they're the engine of the NASDAQ, of anything that's growth. Without chips, we don't have the rest.
Absolutely.
So I've been really bearish all year. Some of the market, but definitely semis. And now we're at points where they start to get interesting. And perhaps my biggest trade last week was the SOX via SOXL. I would definitely get aggressive there if we pull back into, say, middle of the range. So on SOXL, that would be a bit under 9. We traded all the way down to 720 last week. So I'm going back to some of my favorites. NVIDIA, I was a buyer 93.86. I'm not buying it up here. We pull back into 100. I would definitely be a buyer. I bought Immunome, a small biotech. A lot of people know I'm a big fan of and know the CEO well.
Is that IMNM?
Yeah.
Yes, got it.
CEO was buying it in the 13s, then he bought 7s, and it was 5 last week, 550. I bought some at 750. We backed it, and I bought some. We backed up into 6, I'd be a buyer. So a lot of the same names, and not really reinventing the wheel with ideas. I'm trying to keep it real simple. What's going to perform in an environment where there's evidently, I mean, let's face it, we're going to have a slowdown. It's like, if we don't, I'll be shocked. So what can work in a slowdown? And it's a lot of these bigger names. CrowdStrike just had a monstrous move. You sure as hell should know if that pulls back 30, 40 points, I'm right back into CrowdStrike. But I guess my thought is we hit 402 on Qs, and then we're back to 465. I don't think it'll take much to be at 450, 445. And my thought is between here and there, you might have to like sit there and just hold, like put your hands under your butt and do nothing. So all those names are on my list, but I'm not going to force it in between. I talked a lot about this on Twitter. I'm going to say it again. This is a market to make a week, to make a month, to make a quarter last week. And then it's a week right now to do, the market's trying to do its very best for you to destroy the good work you did last week. So all those names are on my list, but I'm doing a lot less in between. XBI, biotech's gotten so cheap. I can't tell you the charts make sense. I can't tell you the Trump administration is going to be favorable. But if you look at XBI, it's gotten insanely cheap. The underperformance over the past 5 years is insane. I bought some of my favorite biotechs, but like Immunome, but I didn't buy XBI under 70. That came back into 70 as an investment. How do you not look there? So those are names I'm all looking at, and I'm not trying to bore you. I wish I could tell you I have an idea to reinvent the wheel. I can tell you yesterday when I saw Apple at 210 from a low last week of 168 on news that a lot of people didn't quite understand, I was shorting the hell out of it pre-market 210 to 212, and I was doing puts right after the open. But now it's at 200. Is it a short? Is it a long? It's a nothing. And I see a lot of stocks like that right now. Okay, so nothing.
So it seems like you're being very deliberate about picking your spots, and that's kind of why I was asking about less is more earlier. When you see it, you're definitely not afraid to take it, but you're not trying to be haphazard about it.
No, and directly, I really think people should start to think about their Monday, making their Monday, Tuesday, Wednesday, Thursday, because you have to really sit on your hands in between, and that's the market we're in.
Okay. Can I ask you about some individual stocks? Yeah. And by the way, you know, no reason to apologize here and say, you know, I wish I had some groundbreaking. Sometimes we're big fans here of saying we're going to play the hand the market deals you. Sometimes the market deals you a hand where what you're supposed to do is sit on your hands. So if that's the right answer, that's the right answer.
But it's about that. And he said, God, I didn't know it would be so active here. And I know you swing and you manage money, and it's been so active. And I said, that was last week. We're a product of the environment. If you don't trade your environment, you're screwed. And last week it was to be aggressive and understand that volatility was your friend if you respect it and take advantage of it. And now, if you don't like extremes, okay, now sit on your butt because there's less to do. But we don't control the environment. We just control how we react to it. And I think if traders can't figure out environment first, like first and foremost, what's your environment? The rest comes after.
Okay, I like that. And folks, I think that's stuff that we can take from right here. We are with David Prince from T3. Download David's free ebook to help you navigate this market uncertainty. Doesn't look like that uncertainty is going away anytime soon. QR code here at the top of the screen. I threw the link in the chat as well. Okay, David, you did a great job running through some of the stocks that you're looking at. I do want to ask you about a couple here that we talk about on a regular basis. And my first one here is going to be Netflix. We actually just talked about that. Netflix still doing a really good job staying above its 200-day moving average. Maybe not as in the crosshairs for the whole tariff uncertainty that's going on right now. Do you have any thoughts here on Netflix or a trade plan for this at all?
Sure. Well, first thing I should tell you, so there's a fellow who works with me in Inner Circle, is a dear friend who's been killing it all year on Netflix, long into the last print, long on all dips. And really, I laugh because you said a guy's been making a living on just trading Netflix. He's not just trading Netflix, but boy, he could. So here's what I remember from last quarter. They have a whole new growth business via sports, especially live sports.
Yep.
And I think a lot of people didn't really understand the size of the opportunity. So I get why it's working. I also get that in terms of comps, its market cap still pales in comparison to its other old friends from Fang. It's not part of Mag 7 officially. So when you look at it, I get why it can work. And then, of course, it's not really a company affected like tariffs. That said, this item from the Journal that has it gapping this morning, which for those that don't know, say basically they're going to double revenue by 2030, and they plan on having $1 trillion market cap.
By the way, 400 million going into today. 400 billion, excuse me. 400 billion market cap going into today.
And they plan, or however you would describe it, to have $1 trillion market cap is what they're quoted as saying, right? That's part of the article.
Yep.
So I'm a big believer that half of these earnings prints are about where the stock is pre the print. I always say, listen, I don't care if you're looking for a big beat or not. If the stock is up 50% into the quarter and is just raging and at, say, 75, 80 RSI, now the pressure's on, right?
That's right.
So you look at this that traded 816 last week at 950, the pressure's on. So to me, it's a nothing. I have a feeling my partner may do like some sort of call spread, like sell this week's, buy next week's. As far as I'm concerned, it gets a bit tough because it's rallied so hard into the print. But I'm expecting a pretty decent number because I see where they're between advertising, which is their new growth vehicle, and live sports. I get the bull story behind it, and I'd be a buyer of dips. In terms of buying options on a stock that just traveled like 15% off lows, I don't see a great opportunity. And I'm not up for betting against it. So I think it's a no play for earnings for me.
So that you're practicing what you preach right here. You do like it long term, but you don't really have the edge going into this earnings print. So the right trade here is to sit on your hands. Absolutely love that. And as far as what you were talking about with the live sports, I do see the runway there. Looks like the chat does too. Joe here saying nobody's going to cancel their Netflix. Completely agree with you, Joe. Yeah. I think this is if
and they have pricing power. They've proven to have it.
Absolutely.
Like and on top of that, because you pay $1 or $2 more.
No, exactly. It's one of the cheapest subscriptions out there. As long as you have internet, you're probably getting this too. Joe goes on to say here, yeah, I think the Super Bowl will be on Netflix one day. What do you think about that? What'd you say that again? Sorry.
I've heard people say the same thing. It doesn't feel like out of the question. It feels like there was a point you'd probably say that's idiotic. No, that seems like it's very viable one day.
That's exactly what I was just going to say. On the surface, I might be like, the Super Bowl on Netflix? Come on. The more I think about it, Joe, I think you're onto something. And honestly, I wouldn't be surprised. Right? Say it again.
Did we have a game Thanksgiving or was that Amazon?
It was Christmas. We had two games there. It was like, the Chiefs.
We're moving there already. You can see it.
Yeah. And the other thing, I don't know if I was caught off guard by this, mea culpa, if you will, here. When I watched the Tyson-Paul fight, they had all those buffering and streaming issues. And I was on X during that, and there were a lot of people saying, hey, this might be a pretty good short. Hell, I was looking at that for a little bit. Well, it sold off a little bit that following Monday and absolutely ripped from there. And then several months later, they had a flawless rollout on Christmas Day.
People realize that's a cute moment. That sucks for them and certainly their PR. But on the longer term, they realize the flip side is look the amount of people and the audience they commanded from the event. And that was certainly more important because you got to think a company this size will fix a problem like that. So
and they did, and they did. Okay, real good stuff there on Netflix, David. I'm going to ask you about Tesla. Do you see anything here on Tesla, or is this something that you're trading? What do you think here on Tesla?
I was pretty aggressive into that last move at 220, right? Before tariff blowups, and held it to, I don't know, high 200s, 300. I think I even played some through TSLL because I got pretty aggressive thinking this can really work. So under 8 to about 12 and was out. Two things. First thing is, if you look at it, it's tighter than most stocks right now,
Yes,
given
it is.
these wide ranges. So we have 3 days. It's hard to call a stock that is 20-point moves tight, but tighter than most. So I am expecting to have a larger move any day. Question is higher or lower? Frankly, I get it, right? I understand every Tesla bull and robots and full self-driving and the size of that moment. But right now, when tariffs exist, it's much easier for people to look at the real important part, like their business today, right? Even batteries are affected right now when it comes to tariffs. And God knows the car business isn't doing particularly well. So if there's a stock that might revisit the recent lows, I don't think it's a stretch to say it might be Tesla. So short-term bearish, long-term, I'm never worried about valuation because you're betting on the future. So trying to figure out a PE on the future is the dumbest thing any trader can do. So I really believe it's a buy and hold at some point. But if you're asking me the next 2 weeks, I think it's lower, not higher, because it just has a lot going against it. They're not the type of company that can perform with tariffs. They are affected by tariffs. Prior to tariffs, they're getting their butt handed to them by Boyd and other companies in China. So there's just so much going against it.
Yeah.
Why try and be smarter than the market? I think you'll be able to buy it cheaper.
Okay. Real good stuff there. Last question here. This also comes from, I guess, a story or a setup here. I just want to get your opinion on this. What do you think of death crosses? The reason I ask is because recently we had Tesla death cross here. We also had the SPY death crossing here. So give me your opinion on death crosses. What does this mean? Where do you think we go from here?
Here's the first thing. I want to just be upfront about this. I have a million technical guys I rely on, even if I'm at this like 30 years, 29 to be exact, but 30. And I can read a chart with the best of them. But if you ask me the difference between a bull flag and a Ukrainian flag half the time, I wouldn't know. Now, I kind of know, obviously, but you get the idea. Some people put too much importance on them. It's a part of the picture. And to me, if you can't understand how to take risk, if you can't understand that a certain type of stock like quantum, no one cares about in this environment, but they do care about Meta, Amazon, and not even Apple. Like that was the last stock I focused on, but certainly I focused on buying an NVIDIA under 90. That's what makes you real money. Then you put the chart in. That said, my experience the last decade is, I'm not an expert there, but anytime someone mentions the death cross, 50% of the time it means nothing, and it's where you should be buying. So my experience is it means absolutely nothing. And to me, to have an edge means it's got to be better than 50% of the time. I saw a stat on Twitter yesterday from someone who's fairly astute, I think, because they were pointing it out. They said it's like a 50-50 ratio as to whether it provides any follow through to the downside. So that means it means nothing. If it's at 50-50, who the hell cares? So yeah, they mean zero to me.
Okay, David, I'm going to steel man your point here before I let you go. That was absolutely perfect. We're going to call that a David rant here on Tuesday. I thought that was great here. In a note, analyzing nearly 100 years of data, technical strategist at Bank of America, Paul Ciano, wrote that 52% of the time the pattern occurred, the average lost a mere 0.5%. So to your point there about a coin flip, indeed, 100 years of data says that is exactly the case. So, okay, David, real good stuff here today, folks. Download David's free ebook to help you navigate market uncertainty. We appreciate all of the spots that you see here today. Have a great rest of your week. We're going to check in with you next time. All right,
have a great day, guys.